a degree of anxiety and uncertainty about European political development, for instance, that consumers and investors will restore their previous pattern of consumption and investment. On Bulgaria, there is a convergence process that is well advanced. We are marginally involved in the process because we do not pass judgment on anything else than convergence towards inflation. And we look at the fiscal position and the sustainability. But
IBM, which projected strong revenue growth in the new fiscal year, citing AI sales above $5 billion since the middle of 2023. And after the bell today, we'll get earnings from Apple and from Intel. Apple expected to report record results despite a drop in sales out of China. Bloomberg Technology co-host Caroline Hyde is here to break down all these tech earnings, starting with Meta, Microsoft, and Tesla. Let's look back before we look forward. What is your biggest takeaway here, Caroline? There's a lot of talk, of course, about DeepSeek in the earnings calls that we've heard thus far.
And both of them, Satya and Mark, had positive things to say about DeepSeek. Look, they're trying to find the silver linings to all of this. Microsoft going as far as to be actually offering R1, the model within its AI Foundry, if you want to be going on to Azure and actually developing that model yourself. But Azure was the weak point for Microsoft, and that's why they still have to spend. Azure saw 31% growth. This is where their AI and the generative AI offerings lie, and it's down sequentially quarter on quarter. Still a lot of bookings coming from OpenAI-related offerings, and that really caught some analysts' attention, but it wasn't strong enough, and the key issue is capacity. They don't have big enough data centers. They can't support it. We know that's why OpenAI had to go to Oracle for some of its cloud computing in the future, so that's why they're still committing to $80 billion.
What do you make of the Microsoft weakness in cloud growth here? Because you are seeing Microsoft really drag down the Magnificent Seven today.
I know, and actually it's the worst day for Microsoft since October, so a significant drop. We're now at the lowest since November. They actually beat on their fiscal second quarter. They actually saw 12% growth in revenue. They saw earnings on the upside, but it really was the fact that the Azure within that wasn't living up to expectations. So Amy Hood talking about discipline as well. So I think that was sort of injected there. Look, we're spending, but we're spending wisely. Meta on the other side is saying, we are committing to spend and spend big because we want to be the #1 open source model in the United States. He's going all in on AI. AI engineers they're talking about as well, but already they are getting return on AI. You're seeing advertising become more bespoke, and that's why they can continue to deliver revenue. They're at a record high today.
5 p.m. Wall Street time, I guess 2 p.m. in Cupertino, we get results for Apple. There has been so much speculation about the hit that we've seen or seen telegraphed in iPhone sales.
Yes.
What are the expectations for those results when we get them today?
As you mentioned, record results and what is anticipated. This is largely coming from services, and still the iPhone is the dominant source of revenue growth. Revenue is going to eke up about 3% overall when you're looking at the quarter. We want to get into the real nuts and bolts of how weak is China, how fast is it slowing, what is the impact of Huawei and local competition, but also how can they steer us to a future of Apple Intelligence where perhaps DeepSeek has been a help for them there. This drives down the cost of these overall large language models, makes it easier to be using and therefore cheaper to be offering. I think Apple's going to be a key one overall for whether or not we've still got that resilience in the AI offering and whether they can play catch up.
Thank you, Caroline, so much. We're excited for the show. Of course, you can catch Caroline Hyde at Bloomberg Technology today at 11 a.m. Eastern, breaking down what we're seeing out of big tech results, looking ahead to Apple. Joining us now, FL Putnam Chief Market Strategist Ellen Hazen. You see the numbers that we have so far. You see the dispersion brewing within the Magnificent Seven. What do you like at this point, now that there are new winners and losers?
I think it's really difficult to extrapolate too much from one day. We saw so many of these semiconductor companies really go down dramatically on Monday, and then look at them now. They're pretty quickly regaining a lot of that loss. Today we're seeing Microsoft down, as you mentioned, on the CapEx, but I wouldn't be surprised to see that go up as well. Tesla started last night after they first reported down, and now it's up. So I wouldn't read too much into the after-hours trading or the single-day trading. I think these things can change a lot. I think the important thing to do is to look at earnings growth expectations for this year and for next year by sector and company by company. And what we see when we look there is that the earnings growth is broadening out. We do like the Mag 7 still. There's no question that they have outstanding organic growth. But at the same time, you're seeing earnings broaden out into financials because of the steeper yield curve. You're seeing earnings broaden out into industrials. And so we look at the Mag 7 as still very solid investments, but we think it makes sense to diversify a little bit into some of the other 493.
Elle, I'm very curious curious just sort of how you look at what happened on Monday as a catalyst, look at the kind of shape of that. And you mentioned Magnificent Seven, so much of that has been tied into AI. And I wonder how much the event, the advent or the awareness of DeepSeek sort of prompted you to think differently about the role of AI, how things are changing, how much staying power, I guess, are the events of Monday going to have?
I would say a couple things about the events of Monday. The first is that when you go into a year with the S&P up 25% and many of these stocks up 50% or 100%, then you're at risk of any negative catalyst. And this happened to be the catalyst, although, as you know, the data had been coming out since December. It wasn't entirely brand new over the weekend. It's just that attention became more focused over the weekend. So anytime you have very expensive stocks, they are at risk of weakening. And the other thing I would say about it is I've been looking at tech for a long time, as I know you and your colleagues have. When the price of something goes down, standard economics says that demand goes up. And it's coming out that it looks like maybe these are not apples to apples cost numbers. So I don't want to say that they're true, but let's just say they were true. Let's say that the cost of inference and training might be 95% lower than what we thought a week ago. Well, if that's the case, I don't think the spending is going to be down by 95%. I think what will happen is people and organizations and companies will find ways to use up the same dollar's worth of compute power, and it will just accelerate the AI transition. It's just like, we have so much more memory on our phones than we did 10 years ago, or on our computers than we did 20 years ago, and yet we still use them to the max. The same thing is going to happen with AI. Could there be an air pocket? Yes, of course. Could there be a dislocation? Yes. But ultimately, this is a really powerful technology, and the usage is going to go up commensurate. And if it's cheaper than expected, then the usage will just go up that much more.
I think it's interesting to sit here on a day where you see Microsoft falling the most since October, the NASDAQ 100 still rising, Broadcom being a major beneficiary here. Broadcom's biggest customers, of course, include Meta, which has huge spending plans. When you think about the winners and losers of the spending boom, even if you think that spending boom is at risk, who are they?
I think from the chip side, it's definitely still NVIDIA. It's definitely still Broadcom. No question about that. And we own both of those stocks. I think that what we are seeing, though, is if and when, and it's probably more a question of when, you begin to see the hardware be less of the bottleneck and the hardware becomes cheaper, then what will happen is the software companies that are building on top of that are going to benefit. So it's just like if you think back to the tech bubble, right? Those of us that remember that, you saw fiber, and at first the tech bubble was all about Cisco and Corning and the companies that were doing the hardware. But who were the real internet winners 5-10 years later? It was companies who built on top of that, companies like Amazon, companies like Facebook. And you're going to see the same thing here. So you're going to migrate toward the cloud providers, and you're going to migrate toward software as a service companies that are providing enterprise-wide software solutions for companies on top of that cheaper hardware. So in the medium to long term, that's where we're going to end up. But in the short term, we absolutely still do believe in the chip need. That's not going to change.
Ellen, lastly here, I wonder sort of how wide you're widening your aperture. So you mentioned you're interested in looking at the S&P 493, kind of looking beyond the Magnificent Seven. How about small caps? There's been such a loud and growing louder chorus of people saying small caps are where it's at, or increasingly so.
We really don't like small caps very much at this point, and let me tell you why. It's for the same reasons I said when I look at earnings for the fourth quarter that are coming in. When we look at small cap earnings forecasts for the S&P 600 or for the Russell 2000, they're still declining. I'm not saying that the earnings are down year over year, but the earnings estimates for 2024 are going down. The earnings estimates for 2025 and 2026 are going down. And the earnings estimates for both the Mag 7, but also the other 493, they're going up. And at the end of the day, as a fundamental shop, we believe that stock prices are correlated to earnings. And if earnings are going up, then those stocks are going to do better. And we are not going to be interested in being materially overweight small cap stocks until we see the earnings estimate declines stop and ideally begin to accelerate in a positive direction.
Ellen, we thank you so much for joining us today. Big earnings day. That is FL Putnam's Ellen Hazen. Some other movers we're watching this morning, a lot of messiness under the surface. Cigna is dropping on a profit miss due to higher medical costs. A big theme, David, that we're going to be watching throughout the Trump administration. We're also watching ServiceNow sales outlook disappointing. MasterCard beats estimates, so you are seeing a little green on the screen in this earnings season. MasterCard up 4%. The big story, I think, is really UPS, a really stunning move there.
Yes.
It's down almost 15%. This is one of the worst days. I believe the worst day they've been having since 2008. And a lot of this is due to losing a potential relationship with its largest customer, significant contract. They didn't cite that it would be Amazon, but it's something that investors are gleaning and analysts are certainly asking about.
Certainly something they're worried about. And I think overlaying all of this, too, is just the uncertainty about policy that we've talked so much about. Healthcare policy, as you mentioned, when it comes to that, but also just tariffs policy, trade policies. We get incredibly close to that deadline that the president has put in place of February 1st, Saturday of this week. I mean, we'll see what happens then, but I know folks in Canada, Mexico, and companies, of course, doing business with those countries and China, extremely worried about what could happen.
You know, it's interesting. There's a tariff policy, and we'll run some of this tape later. We spoke to John Gray about it as well. A lot of companies, a lot of big investors like him, not yet changing course because they don't know what to expect. I do see that politics are already impacting things. You were kind of nodding when we showed Cigna up there. It would be interesting to see if we could pull up a board also about the other big health insurance companies as well. As we know, those drug price negotiations are also causing a big impact to drug companies and providers, healthcare providers alike.
Totally, and I return to what we were talking about with Caroline Hyde just a few minutes ago, this moment that we're in, kind of looking at these big tech companies which have had so much promise and so much enthusiasm and exuberance around them for so long here, and the degree to which, as we talked about, there has been an eagerness for commentary from those executives on what we saw with DeepSeek earlier this week, and I think all of us still processing just the magnitude of the moves that we saw on the heels of that kind of revelation about what that Chinese company had been able to do, but also still, I think, a level of circumspection, eagerness to kind of determine what has that model actually done, what is it able to do, how transferable is that going to be, and then picking up on something else she said too, just how that's going to be mimicked or will enhance the models that we've seen so far.
We'll talk so much more about that on the show, but as we promised you, that Blackstone tape, Blackstone had delivered a beat for fee-related earnings, had one of its best ever quarters in history. They're also set for a New York comeback with the purchase, according to Bloomberg News, a purchase of a Midtown Manhattan tower. I spoke with COO John Gray about CapEx concerns in the data center business in particular off of DeepSeek. Listen.
It was a terrific quarter for us. Distributable earnings up 56%. The key drivers were the things that really are essential to our business, which is fundraising, investing, realizations, all at the highest level in 2.5 years. But I think the bigger picture stepping back is what's quite exciting. We're seeing a real sea change in terms of openness towards alternatives, towards private assets. And you see that in the individual investor space, what we call private wealth. We had an 80% increase in inflows last year in this area. And January just now was the best month since May of 2022. Investors really appreciate the premium returns there. And then I would say private credit with insurance companies, with pension funds, with individual investors, the ability to bring up those investors right up to the borrowers, capture some additional yield, that's really paying off. And if you look at our corporate real estate credit assets together, they've grown from $176 billion 4 years ago to $450 billion today. We do that as a pure investment manager, and we just continue to see a lot of momentum. So a great quarter, but it's really this sea change that excites me and the outlook as we go forward from here.
We'll talk more about the sea change that you're seeing, but I do want to go right to one specific business, the data center business, because Blackstone is one of the biggest owners of data centers across the country. Of course, the claim by China's DeepSeek that they could now do this much more efficiently in terms of capital expenditures, investors are now very concerned about the infrastructure that's needed to fuel the AI boom. Did you call up your clients after the weekend to see whether they might be spending less, and how might this be impacting you in the longer term?
We absolutely spoke to those clients because they're essential in the business. And I would just describe sort of where we sit in data centers. We are the largest investor. We've got $80 billion of leased data centers around the globe. The good news is they are long-term leased to major companies, and we don't build these centers speculatively. So it's a very prudent approach. The question, though, coming out of DeepSeek is what does it mean for demand going forward? And I'd just start by saying what we've seen from other, people talking about this, which is the price of compute is coming down and the usage is obviously going to go up. And when that happens, we still think there's going to be a vital need for infrastructure. Microsoft and Meta on their calls yesterday talked about fungibility. They said we still need physical infrastructure. In fact, Mark Zuckerberg said he thought it was a strategic advantage, but they said maybe there's less in training, there's more in inference, maybe there could be more in cloud. So I think as we see more and more adoption of AI, there's going to be more and more demand for compute power. It will happen in data centers. The form of it may change a bit, but we still think it's essential, as is the energy and power, which we think will continue to be needed. So we're going to continue to operate in a very disciplined way. We're going to build when we have demand from our tenants. It feels like it will continue. The form of it may shift a bit.
How might you see this impacting others? Because the reality is you have a lot of Wall Street that followed you into this trade, many other private investors looking to help build data centers. Do you think that there are mistakes being made?
Well, so far, I would say not, because we haven't seen speculative building, right? You don't go out and build $1 billion data center if you don't have a tenant, you don't have power. It's not like building condos in Miami and you're sort of betting on an overall market. It's very specific. There's a relatively small number of major tenants, so we haven't seen an overbuilding. It may give folks some pause. There may be a little less capital flowing into the sector as people wait to see where this settles out. But from our perspective, we're going to continue to look at the demand signals from our tenants. And if they need this, we think we're uniquely positioned with QTS in the US and Europe and with AirTrunk in Asia. We think we're set up well to serve their needs at scale, to deliver them timely what they want. And so we're going to continue at it. We'll see what others decide.
That was Blackstone Chief Operating Officer Jon Gray. And this is Bloomberg.
Well, authorities say the collision between an American Airlines regional jet and a military helicopter near Washington's Reagan Airport left no survivors. Bloomberg's Tyler Kendall is in Washington with the latest. And Tyler, there was a briefing this morning in which the investigation was discussed in some detail. Where do things stand, and what can we expect to learn here as the day goes on?
Yeah, good morning, David. There are hundreds of first responders here on the ground at DCA as this search mission continues. As you mentioned, officials told us reporters in a briefing earlier that this unfortunately has moved from a search and rescue mission to a search and recovery mission. Officials say that 27 bodies have been recovered from the Potomac River. We know that 64 people were on board the commercial airliner and 3 people were on the U.S. Army Black Hawk helicopter when those 2 aircrafts collided. But questions still remain about how this happened. Now, newly minted Transportation Secretary Sean Duffy said that this could have been preventable and that there were clear skies and that ultimately both of these aircraft were on normal flight patterns. So we are waiting for a briefing from the NTSB to see if we could get any further information there. But officials are trying to assure the American public that the skies are safe to fly. DCA is expected to open normal operations starting at 11 a.m. Eastern. David, this is the first time in more than 15 years that there has been a deadly crash of a U.S. commercial airliner.
We also know that this comes just days after both Sean Duffy was confirmed as the head of the Department of Transportation and Pete Hegseth being confirmed as Defense Secretary. We also know now, according to the White House press secretary, that the president's press briefing will be at 11 a.m., which is around the same time that we understand that the airport is going to reopen. How do you expect the administration to handle this, especially given that there are multiple investigations going on, including from the Pentagon?
Right, exactly. So we know that Pete Hegseth has been briefed on this, and we know that the president is receiving routine updates when it comes to this. I did catch up with the American Airlines CEO, Robert Isom, who said that he also has been in touch with the White House, although declined to say whether he has been in direct touch with President Trump. We know American Airlines is sending 100 personnel here to DCA to help assist with the families of the victims. But there are other questions about how the federal response is going to evolve, considering that at this moment there is not a confirmed FAA administrator. The last FAA administrator, Michael Whitaker, gave his resignation on January 20th, the day of Trump's inauguration. We know that our Bloomberg News team is chasing who his replacement could be and whether or not that could be fast-tracked as this disaster and the investigation unfolds.
Tyler, we thank you for your reporting, of course, outside of Reagan International Airport. That is Tyler Kendall in D.C. Stick with us. We have more markets ahead, more coverage for you, and more updates, of course, on the very sad day in Washington. This is Bloomberg. are 30 minutes into the trading day. Welcome to Bloomberg Open Interest. I'm Shanali Basak.
And I'm David Gura. Matt Miller and Katie Greifeld are off today.
And coming up, it's an earnings bonanza with big tech leading the way. Apple takes its turn in the spotlight today after the bell. And Powell hits pause. The Fed adopts a wait-and-see approach as President Trump casts uncertainty over the direction of the economy. And executives are also navigating the uncertainty. The CEO of Tony Roma's is going to weigh in on how Trump's policies could shake up the restaurant industry. But let's get a check on these markets. It's an up day in the markets. You're seeing the S&P 500 up about 0.5%. Same too for the NASDAQ 100, shaking off any of the dispersion you're seeing in those big tech earnings. The 10-year yield firmly at 4.50. It has not moved much over the last couple of days, David.
Let's take a look under the surface here, look at what stocks are moving at this hour with Bloomberg's Jess Menton. Jess.
Well, guys, this is the busiest week when it comes to corporate earnings for the S&P 500, with more than close to 40% of the market cap for the S&P 500. So obviously we heard from a bunch after the bell yesterday. So Meta beating on the top and bottom lines, but Microsoft unfortunately seeing some issues with that Azure growth there. So that's when you're seeing that stock pressured this morning. If you look at tech's influence though in the S&P 500, easing from those multi-month highs, but still nonetheless over 30%. So still has that way to sway things. But I want to point out Tesla because its stock has doubled in value since its last earnings report from a couple months ago. Now, even though it missed on the top and bottom lines, it was revealing some details when it comes to those robo-taxis. It apparently might unveil some things in Texas later on in June. That's why you're seeing that stock moving higher. Also on the bets that if you're looking at sell-side analysts and their expectations for revenue growth in the future, moving higher too. So that's why you might see a little bit of a boost there for that stock. I want to check in though also with chip makers, Lam Research in particular, because this is a chip supplier. A lot of news this week, of course, when it comes to semiconductor companies, but you are seeing that stock higher, especially when it comes to that outlook that it has. If you look over though, especially when it compared to ASML, also those stocks both kind of performing relatively in line so far this month, even after some of those declines we saw earlier this week. And lastly, I want to get a check in on the economy, of course, when it comes to Caterpillar, when you think about the bulldozers, and especially when you think about what it means for global growth in the economy. Unfortunately, when you're looking at its outlook, especially for 2025, came in below what analysts were expecting. So that's something we need to keep a close eye on too. So that's why you're seeing that stock pressured. And of course, can't forget Alphabet, and it's coming in next week, as well as Amazon, but Apple after the bell today, guys.
Jess, we thank you so very much for looking under the hood for us. Also want to just show you some of what's going on in the housing market as well. December pending home sales month over month fell 5.5%. The estimate was for it to be unchanged. On an annual basis, pending home sales for December fell 2.9%. Remember, you're looking at a 30-year mortgage that is flirting with a 7% level, still very high for a market that has been on mortgages far less than that and holding on to that rate. We're going to shift gears, go out to the broader market. Joining us now, Max Kettner, HSBC Chief Multi-Asset Strategist. There's big tech, there's rates. I just want to give you a bit of a lap here to take because you were the one that called that 4.5% danger zone in the 10-year. We got there and the moves were whipsawing in the broader equity markets on the heels of that zone. Is there a new danger zone now to look out for?
Yeah, good morning. No, I don't think so. I think actually we're moving increasingly away from that danger zone. It got really quite, well, dangerous when we were moving towards 470, 480, and, you know, with perhaps the CPI and the PPI data, there was some potential really that, you know, we'd be pushing towards 5%. And that really was sort of the original danger that we had in mind that could really be putting risk assets under more severe pressure, whether that would be credit spreads, whether that would be equity, whether that would be emerging market assets, really across the board. That, of course, hasn't happened. So I would say, particularly the CPI and the PPI data actually have been the real game changers over the last month, because that disinflation that we've seen in the data, not only headline, but core, also good inflation, that little bit of an uptick that we've seen there in the last few months, reversing again, that really acted as a game changer. The real disinflation, we think, is really going to come through now only in the next 4 months. So the December disinflation that we've seen come through was sort of an extra kicker that we didn't expect, and that really, to us, was quite a bit of a game changer.
And we'll see what the PCE data are tomorrow when we get those. Max, I want to ask you just how much the narrative, the story has changed after what happened at the beginning of this week. I think there were a lot of people who thought that going from 2024 to 2025 would see kind of the continuation of the same story. Yes, the effects of the fervor and enthusiasm for AI might have been slightly different or more muted. Given what happened this week with what happened with DeepSeek, how do you sort of see that narrative changing when it comes to big tech in particular?
Yeah, I think it hasn't actually changed that much. So when we look at Monday, for example, Monday I was slightly puzzled because people would ask me, "Oh, would you buy the dip?" And then I sort of looked at the screens, was like, "What kind of dip do you mean?" Because when we looked at credit spreads, for example, they barely budged. By Tuesday, it was all gone, and quite frankly, what we've seen on Monday was rather a rotation within the stock indices and within the AI theme as well. Remember, on Monday we actually had more than twice as many names up in the S&P rather than down. We had 350 names going up, but only 150 down. So it was really a rotation within that. And it was also a rotation within the AI theme. So that's why I don't think it's actually that big of a game changer. Yes, if that really turns out to be absolutely true around DeepSeek, which there are a lot of question marks, but if you assume that's all completely coming as we're now, or some people might expect now, then yes, the theme might be moving away from pure infrastructure plays more towards the AI enablers and those ones that have really spent massive amounts of capex. But once again, that is much more a theme of rotating within the AI theme that actually should leave all the other risk assets in particular pretty unaffected.
I guess you could see what transpired this week as kind of a catalyst for more broadening out in the market. And I wonder if you look at it in that way, where you're interested in sectors beyond, again, these mega cap, huge tech companies, where do you see that's appealing, kind of complementary to AI and big tech?
Yeah, look, I mean, the US, from a regional standpoint, the US still remains really the core overweight for us. I think actually some of the data that we got today is really, really good. It's exactly what we want because Sonali was also talking about the dangers. And the last thing that we really want right now is activity data that is shooting the lights out. That's not what we want. We want the kind of data that we've seen with GDP, with pending home sales as well, that is kind of strong, but not too strong. So still pretty solid growth, but not too strong, such that we won't get to that danger zone and perhaps starting pricing a tail risk of premature rate hikes again. That's exactly what we want. We want that kind of mixed data, but still overall solid growth. So that means still core overweight in the US. I actually think that Eurozone equities are worth a shot tactically because the weaker euro really, really helps. Within the Eurozone, you asked about the sectors. I think it's particularly the export-sensitive stocks. It's particularly those stocks that have a high share of foreign revenue, particularly to the US as well. Within the US, I think it's also the banks. It's really the banks that should be benefiting from further deregulation, from still relatively high yields, from this, the steepening of the curve that we've seen, but also this beginning of the M&A and also the capital market cycle overall.
Max, I'm looking at the trade building, and you have a lot less excitement right now in the Magnificent Seven trade. The group together is down 0.2% on the day, led by Microsoft's decline, but Tesla also turning negative as well. Sour sentiment under the surface. So if that's true, and you don't have a robust set of excitement here building in trades around the Magnificent Seven, how then can the broader market perform, given that the Mag 7 has sometimes accounted for, say, 40%, at least north of 30% of the S&P 500's performance?
No, you're absolutely right. If of course, we get the Magnificent Seven down, a third or 50%, let's paint a dramatic picture, then of course that's going to pressure the overall market down. But at the same time, when we look, for example, also at the numbers yesterday, actually, the numbers weren't all that bad. Yeah, there are some worries perhaps around Microsoft, but the numbers and the outlooks weren't all that bad. That doesn't really justify a huge decline from here on. And I would say when you look, for example, at valuations valuations, yes, valuations on an absolute basis, they might seem high, but compare them with where they were 2 years ago. They've barely budged. They've barely gone anywhere. Why? Because they've really delivered on those earnings. And when we look at the broader market, you were asking also about the broader market. When we look, for example, we went into Q4 with almost all sectors being expected to post a quarterly decline in earnings. Yes, the year-over-year increase looked pretty stellar, but most of that was because earnings growth in the last 3 quarters already had been so strong. But on a sequential, on a quarter-on-quarter basis, actually analysts were expecting for most sectors a decline. So really, really manageable earnings expectations. And when we look forward, look at Q1 earnings expectations for the S&P compared to Q4 are flat. So once again, we're faced with pretty manageable, broad-based earnings expectations. That should be pretty easy to beat.
Max, great to speak with you. Thank you very much for the time. That's Max Kettner of HSBC. And coming up, we're going to stick with tech on this very pivotal week for tech earnings. DeepSeek is creating an opportunity for Apple's App Store growth as the new AI model disrupts the tech sector. We're going to discuss that and Apple earnings coming up next. This is Bloomberg. The tech rout spawned by DeepSeek's successful launch has not touched one of the world's largest tech stocks. Apple shares are up this week because the DeepSeek news could mean a wave of cheaper AI models are coming to the App Store. Today, Apple reports earnings with a focus on its AI strategy and the weakness in the China smartphone market. Joining us now is Will Power, Baird senior research analyst. He has an outperform rating on Apple and a target of 260. Will, let me start with the AI question, because I think that Apple's approach to this has been kind of novel and sets itself apart from other companies. When you get these earnings today, what are you going to look for in particular that's going to give you some insight into how well that strategy is working?
Well, the AI strategy will take longer to play out. Look, I think as it pertains to earnings tonight, we expect a solid quarter. We're looking for low to mid-single digit revenue growth, importantly double-digit services growth. But certainly some of the questions towards Tim Cook will be geared towards AI and the long-term opportunity. And I think what you're seeing with DeepSeek and the potential democratization of AI kind of plays into their hands, right? Apple's a company that hasn't spent tens of billions of dollars on CapEx to build large language models, and instead is, betting on, riding the wave of others spend in that area, and ultimately benefiting from being the consumer gateway, as those applications develop.
When you think about a consumer gateway, also, you had that news this week between Apple and SpaceX with the Starlink network, the promise of that being on iPhones. Is this a game changer to any degree, or do you see it just being a marginal move, frankly, even with the big names involved?
That's a great question. I think it expanding the capabilities of the iPhone is got to be positive, right? And I think, as you know, they'd already introduced some satellite messaging, capabilities with previous versions. What exactly develops with Starlink in some respects remains to be seen. But it sounds like the plan is to add more voice and data connectivity over time, and so that can only help as we move forward. But look, I think the bigger piece is really just around the hardware and software capabilities of the phone, and what type of innovation do we see? And of course, AI is a big component of that as we move forward.
I mentioned iPhone sales. I'm curious about sales in China in particular. How are you thinking about Apple's sales picture broadly, and what insight are we going to get into that today?
Yeah, look, China's a big focus. The title of our preview was Deja Vu, right? We had a similar focus last year, and I think the supply chain is probably onto something. But broadly speaking, this is a name we've covered going on close to 20 years. The supply chain is often wrong more often than it's not. But look, I think there's no question that there are competitive challenges in China, and I think we'll get an update from Tim Cook and the company on just that. But that said, I think the rest of the globe is still faring pretty well for Apple. Our sense is the U.S. carriers, which is still its biggest market, are starting to see stabilizing upgrade rates. In fact, T-Mobile yesterday reported a higher upgrade rate year over year, and so those are actually positive indicators. And Apple is still early in terms of penetration in developing markets outside of China. So I think when you look at it holistically, they remain on good footing, but without question, I think China is a bit of a headwind here near term.
What about the future? Because even if there's a headwind from China near term, ultimately, do you see more headwinds even beyond China? We're at a place right now where the American economy is seen to be strong, but a lot of investors worried about a weakening consumer, which therefore would impact Apple if you can't keep buying new phones. Everyone keeps talking about this upgrade cycle, but a lot of people holding on to their devices until you can't use them at all anymore.
No, that's right. But on the other hand, we're at trough levels, we think, in terms of upgrade rates. And the reality is, you use your iPhones and smartphones generally more than probably, any other device, as we all know just from our own, day-to-day use. Look, I think Apple Intelligence and expanding the capabilities there is going to be critical to driving more consumer interest and perhaps starting to drive, a better upgrade cycle than we've seen thus far. And I think one of the drivers there is just making it more available, right? It's really has limited availability outside of the U.S. today. So expanding geographies will be critical over the course of this year. And then as you move into the next developer conference in June, which really isn't that far away, what are the next capabilities that they're going to add that could drive, more upgrade interest as we move into the back half of this year?
Will, we thank you for joining us. Good luck today. Parsing through those results, Will Power of Baird. Now, he mentioned DeepSeek. You've been talking about DeepSeek. I've been thinking about DeepSeek. The second order effect is interesting. This idea that software could maybe do better. I wonder how much that trade can build in the market.
I think it's extremely fascinating. And I was struck even during the gloom of Monday, how there was this kind of ray of optimism about how whatever advancements that company has made could be applied to AI models that are here in the U.S. that we've been kind of playing around with and seeing. So I'm struck by that level of optimism. I'm struck generally as I listen to these executives from these tech companies talking, still so bullish about AI and what they can do. And Mark Zuckerberg, of course, a paramount example of that in his comments yesterday.
Yeah, you have it from the tech companies. You also have it from Wall Street. I was struck by the definition here of a long-term lease for a data center. Blackstone says it's about 15 years, and you're already getting those clients in the door. So that impact that you might see from that step back in CapEx this might take some time to roll through the system. It's not going to be disaster on day one.
No, and as we heard at the top, this isn't going anywhere. I mean, the commitment to AI seems prevailing, so.
We'll see how far that commitment goes.
Yes, I agree.
Let's see how patient investors will be. Still ahead, we're going to talk about technology, M&A, and IPOs with Phil Drury. He's Global Head of Technology and Communications at Citigroup. Stick with us for that conversation. This is Bloomberg.
Last night, an American Airlines regional jet collided midair with a military helicopter near Washington's Reagan National Airport, sending both plunging into the Potomac River. D.C. Fire Chief John Donnelly spoke earlier at a news conference.
Despite all those efforts, we are now at a point where we are switching from a rescue operation to a recovery operation. At this point, we don't believe there are any survivors from this accident. And we have recovered 27 people from the plane and 1 from the helicopter.
Joining us now from Washington is Bloomberg's Tyler Kendall. And Tyler, I want to ask you just what that rescue and recovery operation is like. We saw all of the law enforcement officials there arrayed behind the head of the fire department from D.C. This was a big multi-agency effort to begin with, and I gather it's going to continue to be as kind of the leadership passes now to the National Transportation Safety Board.
Right, David. Officials saying that this could take days and that actually the search area has widened due to heavy winds overnight in the Washington, D.C. areas. Also, the freezing cold temperatures that the region experienced last week, which has frozen the water and also complicated efforts. Now, there are hundreds of law enforcement and search as they try to continue this mission as it has transitioned from a search and rescue mission to a search and recovery mission with no expected survivors from the crash. Now, officials are trying to reassure the American public that the skies are safe to fly. DCA is expected to reopen at 11 a.m. Eastern. I'm starting to see people come into the airport carrying their suitcases, coming over to where us reporters are with this overlook of the Potomac River. I spoke to one passenger who has a flight scheduled for later this morning who said that it is absolutely devastating and that he didn't know whether or not he was going to come to the airport this morning.
Let's talk about what we know and don't know yet as well, Tyler, because we had a video message from Defense Secretary Pete Hegseth a little earlier saying that the Army helicopter involved was conducting a training flight, that the unit had a 48-hour pause on contingency missions, and that the crew itself was fairly experienced. But there's a lot now that we also don't know. What is going to unravel over the next 24, 48 hours?
Well, Transportation Secretary Sean Duffy came out, briefed us reporters earlier today, and he said that this absolutely could have been preventable. He said that there's a lot of questions remaining, considering that both of the aircrafts were on normal flight paths. There was communication with air traffic control, and not to read too much into that this being a test mission, that rather these pilots were expected to be rather experienced. So we're still waiting on additional answers there. I did catch up with Senator Mark Warner. He's a Democrat from Virginia. He told me he's raising questions about a shortage of air traffic controllers. So that's something that we'll be following closely as we try to figure out exactly how this tragedy unfolded.
Tyler, last question here. I recall after 9/11 a pretty robust conversation about the kind of situation of this airport, where it is in relation to the nation's capital, to the White House, to the U.S. Capitol building. And there were some who said it shouldn't be there. It was too close. That made it dangerous. I heard a question about that at the briefing this morning. For those who haven't been to that airport, don't know where it is situated, can you just describe its proximity and maybe if you've heard anything, just sort of the degree to which that conversation is likely to percolate again, just having this extremely busy airport on the Potomac River so close to the city where there is, yes, private transportation, commercial aviation, and military aviation as well.
Exactly, David. So we are right over the bridge to Washington, D.C. If you were in the city last night, you likely heard all of the sirens as this tragedy started to unfold. Officials are looking into this, but DCA has long been a preferred airport for our senators, for example. We saw the senators Mark Warner, Tim Kaine here this morning. Also Kansas senators, considering that we knew that this flight came from Wichita, Kansas, including Roger Marshall and also Jerry Moran, who both said that they come to this airport all the time. So questions remaining. Of course, we're also close to the Pentagon, but these military flights being close to these commercial flights is actually something that is normal. Asked about during the briefing, they said that they were both on these routine flight paths and they are not quite sure how this tragedy happened. We are expecting a briefing from the NTSB later today to get some of those answers.
And remarks from the president as well at 11 o'clock Wall Street time. Tyler Kendall reporting from Washington. Thank you very much. And this is Bloomberg.
President Trump signed the Laken Riley Act on Wednesday, and the measure aims to crack down on migrants charged with crimes. Since then, we've seen immigration raids across America from New York to Chicago, and economists forecast that those deportations are going to hurt the economy as businesses face losing workers. Let's discuss the possible impacts with our next guest, Mina Hawk, CEO of Tony Roma, who joins us now. You have a lot of employees, of course, restaurant workers across the country that, of course, are immigrants. And when you look at the first part of the strategy here from the Trump administration to address immigration and deportations, what do you think this means as he expands the push here to crack down on borders? What does it mean for workers, particularly in your industry?
Yeah, thank you, Sonali. So when an immigration policy is enacted, especially to ensure the safety of our community and at the same time protect the workers, it's extremely imperative to see how can it be operated and enforced within the current judicial landscape. As for our industry is concerned, when it comes to employees, specifically in our company, we do conduct background check and make sure that our workplace is a safe environment for everyone, for our consumers, for our employees. With a law like this, there is always a risk of over-enforcing or having unintended consequences. While I understand the rationale keeping our community safe, which is something I also agree on, however, it will all come down to the enforcement, how it will be enforced and who will be impacted so that there is no unintended consequences.
I wonder how much clarity you have about the particular policies at this point in time. It feels like we've lived a year here in the span of a week or a week and a half in terms of all the policies that have been put in place. But how much clarity you have and how difficult is that for executives like yourself trying to make sure that you're on the right side of the law, of course, and keep up with all the policy changes that are taking place?
Yes, with these type of sweeping policy changes, we are still in the very early stage of it. I think with time, we will know how it's going to be impacted. Of course, when it comes to employment possibilities, there are some requirements we had to comply with even before. We do conduct background checks. We do I-9 verification, which are required. The law that we had previously that mandated us. Now with the new law, in terms of how it will be impacting our industry, I think that's something we need to see, and how it will operate. It will all come down to operation, just like in a business. When we have any policies, it comes down to operation. Similarly, in a national landscape, it's going to see how it's going to comport with the judicial landscape and how it will be operated and how it will be enforced.
Let me just follow up on that. And you talk about all of the changes that are going to have to take place here. Do you think it's going to inherently lead to higher costs, having to do kind of more due diligence than you would have had to before?
Absolutely. Absolutely. I think in terms of conducting the background investigation, which was a must, and everyone, especially from a corporate level where I operate in, we do that anyways. But in terms of additional due diligence and compliance, I do anticipate additional cost and training. I think it will also be important in terms of training. Our hiring managers need to know who they're hiring and what type of compliance are required under the new law.
How are you preparing for that? There are a lot of investors that certainly are concerned out there about the overall impact of these immigration policies, very worried about a spike in labor costs in particular, not to mention any potential shortages of labor. Do you have to prepare in advance? What are you doing to get ahead of that?
Coming straight from Davos last week, something I have seen and heard, especially the theme was collaboration in the intelligent age. The labor market in the next few years will be going through a massive metamorphosis. I'm seeing a trend where it's going to move into more AI and robotics. So any companies that are investing in terms of, R&D and innovation, I see, especially in the restaurant industry, I can see in the next 2-3 years where it will become less labor heavy because AI is making its way through every aspect of restaurant service delivery.
We hear so much about the tightness of this labor market. I asked you about costs a minute ago, but has it become more difficult for you to find enough employees to do the jobs that you need them to do? And how worried are you, just given that tightness, that this is going to make it even harder for you to staff your restaurants as much as you need to?
Finding the right labor has been a challenge for the last few years. That has been a phenomena post-pandemic. And I believe, I was on Bloomberg a couple months ago and I discussed about it too. I feel employees don't want to come anymore and work in a restaurant. There is a huge turnover. You spend money training them, and then you have to deal with the turnover cost. So in terms of the cost, I think it will be directed, especially coming straight from Davos. I'm extremely interested to see what AI and robotics can do. I would turn to that as a solution.
Mina, where are you investing in AI and robotics in place of workers right now? Are there plan changes that you are going to make? And is that a difficult discussion to have with employees?
Yeah, there is a lot of trepidation amongst employees because they see AI as a replacement. I do assure that, AI is not a replacement, it's a supplement. If anything, think of it as a smart assistant that everyone has access to. When it comes to looking into AI, I'm looking at solution in terms of the back end. Part of the reason is, obviously to focus on the labor shortage solution, but also to maintain quality of food. For example, let's say French fries. We get a lot of reviews. Sometimes French fries are great and sometimes they're soggy. There are solutions out there that is managed by robotics that gives you that consistent quality French fries. So innovation is actually taking a whole different shape right now. In 2-3 years, I anticipate every restaurant to be far more AI and robotics dependent.
I find that fascinating. I mean, I think there's you can easily dismiss, how can AI work in the food service industry, for instance, but to hear that, I find fascinating.
Right, and it's pervasive. Anywhere from Sweetgreen, which is looking at a bigger AI kitchen, to Chipotle. Let's see how it all shakes out. Mina, I do want to go full circle for a moment here and go back to where we started with the Laken Riley Act, because you mentioned potential concerns or risks around the enforcement aspect. Right now, in the early days, do you see any concerns? Do you see any issues with the way it's being enforced so far?
At the moment, yes, we are seeing some data, right? Because when it comes to any type of punishment or consequences, there are certain principles, there is retribution, there is deterrent. Of course, this act was passed in a way to deter any type of criminal activity committed by migrants who cross the border illegally. However, how far can the enforcers stretch it? What if someone committed petty larceny? Should they face the same consequence as someone who committed a violent crime? So that's something we need to look at about the proportionality of the response.
Mina, we thank you so much for joining us today, weighing in on all of the early moves from the administration. That is the CEO of Tony Roma's Mina Hawk. We're going to get a check on markets now because there's a lot of movement under the surface. You're looking at a NASDAQ 100. I think this is so interesting, David, because it actually turned negative for just a moment, now off of session highs, only up about 0.1%, dragged down by the likes of Comcast, down more than 11% right now. S&P 500 still up more than the NASDAQ 100, about 0.2%. Is it a haven bid? I don't know what you call it exactly at this moment, but gold is at a new record high after tremendous gains in 2024. This is as the dollar had pushed lower after U.S. data, growth data that was less exciting than expected, a little softer than expected.
Part and parcel of all of this, of course, is earnings. We're in the middle of this massive tech earnings cycle here. So let's check in on some of the earnings movers that we've seen so far. UPS, as we talked about, down as demand continues to fall in comparison to pandemic level deliveries. We talked a little bit too just about the prospects of continuing that contract with Amazon or not. IBM, big blue here, in the green as it projects strong revenue growth in the new fiscal year and a jump in AI-related bookings. And Caterpillar, of course, a company we look to as a barometer for industry more broadly. We see a warning that sales and revenues will be slightly lower in 2025 than in last year.
IBM actually looking to hit a record high. UPS, the worst performance since 2020. It's weird. You're seeing tech companies just blow through the roof here, but those bellwether companies companies.
Struggling somewhat so, as we see.
Absolutely.
All right, much more to come. This is Bloomberg. Well, it's time for our daily Wall Street Week conversation. More companies are shifting back to in-office work 5 days a week. But is there enough space for that? David Weston spoke to SL Green's Stephen Durrells and Ruth Kolb-Haber of Wharton Property Advisors about how it's not just a matter of space, but how much companies are willing to pay for the creme de la creme of work environments.
Typically, the marketplace is stratified between the A product and B and C product. And A covers a wide definition of quality buildings, generally buildings of a newer vintage, but in New York City, where the average age of buildings are 65 years old, newer in New York City could mean a building that's 30 or 40 years old. But it's generally buildings that are well located, have either new vintage or have undergone heavy redevelopment, big capital spends over the past several years, have modernized infrastructure, have efficient floor plates, higher ceiling heights, and things that people find important in today's work environment. But within the A product, then you have the marquee product. You have the best of the best.
Stephen Durrells is Director of Leasing and Real Property at SL Green and is responsible for One Vanderbilt, the new office tower looming over Grand Central Station. The way the New York City Comptroller keeps score, about 60% of all Manhattan office space has some form of A grade, but the top 5-star rating is reserved for only 13%, leaving about 40% with a grade of B or below. Ruth Kolb-Haber has spent her career putting tenants into those millions of square feet of New York office buildings. For her, the category of the building makes an enormous difference in getting them leased.
To say this is a tale of two cities is an oft-used, somewhat tired metaphor at this point, but absolutely true. So let me paint a picture. You have the A buildings, such as One Vanderbilt, Hudson Yards. One Vanderbilt, 1 block from Grand Central. The building's full. It just opened during the pandemic. $200 a foot in rent is the last deal they did there. You go 2 blocks from there, and you have the Chrysler Building, and you have 230 Park Avenue, the Helmsley Building. These are icons of New York City real estate. These are the grand dames of New York City office buildings. Both of these buildings are in default on their mortgages and are a good percentage empty. So that is what I would call a tale of two cities.
One Vanderbilt falls squarely in the premium marquee category based on location and amenities.
Infrastructure, healthy work environments, a big amenity package, and things that really address people's, how they want to operate their business and what allows them to operate their business from an infrastructure point of view.
That was, of course, David Weston speaking with SL Green, Stephen Durels, and Ruth Kolb-Haber of Wharton Property Advisors. You can catch Wall Street Week every Friday at 6 p.m. Eastern. And coming up, we're going to talk tech, M&A, and IPOs with Phil Drury. He's Global Head of Technology and Communications at Citigroup. Stick with us. This is Bloomberg.
We have a healthy pipeline of really interesting companies that are ready to come out this year. We've seen also both the VC investors and private equity investors really gearing up to bring companies out. And so it's just a matter of, are they going to see the reception that they're looking for? But investors are also ready to put risk capital to work.
That, of course, was NASDAQ CEO Adena Friedman speaking with me yesterday about the IPO environment. And it's time now for the Wall Street Beat. We're going to stick with M&A and IPOs, bringing in Phil Drury. He's Citi's global head of technology and communications, one of the more senior deal makers over at Citigroup. So, yes, M&A, expected comeback. The IPO market also expected to come back, but you haven't really seen it yet. So what are the ingredients for companies that either want to sell or go public? If you want to be the most attractive, do you need profitability on the table right now?
Well, it's always slower than bankers expect. I'm sure you're used to that. But we do think that 2025 will see a resurgence in IPOs, and we think that will continue into 2026 and 2027. We think this is now a 3-year upcycle in the investment banking wallet, coming off the 21 highs. 22 to 24 were pretty subdued years, as frankly we've not seen in the last 25 years.
What are people waiting for?
Well, I think it's really been on the side of sellers. 2021, we saw peak valuations, and it's taken the last 3 years to grow back into those valuations as we've seen multiple compression. I think we're going to see insatiable buy-side demand. And it'll be really on the syndicate teams, the equity capital markets teams, to make sure they're assessing that demand the right way to ensure you've got long-term shareholders to see long-term sustainable valuation in the aftermarket. So it's going to be really interesting for the first few IPOs to come. We've got some great software companies that I think will lead the re-emergence in 2025, and Citi's playing a lead major role in those offerings.
Help me, there's so much optimism just about the environment generally, but can you take us from that kind of 30,000-foot view where there is all of that optimism about the market going forward to sort of what stands to change regulatorily? What is making this a more attractive environment? Is it simply the promise of there being less regulation and that's enough, or are there specific things, specific changes that are making the market more appealing?
There are a few factors in that. One is cyclical. It's been so quiet over the last 2 to 3 years. Now is the time we must see some action, right? Private equity has a historical low DPI, which we've talked about. Yet they've got some great portfolio companies. I think we're going to start to see those companies come to the market in 2025 and start to see dual tracks, whether that be an M&A track or whether that be the public markets through IPOs. I think the new administration provides clarity, and I do think you'll start to see more strategic interest in M&A. And what drives that M&A is the change in the narrative for those strategics, and that's where artificial intelligence has really given a new catalyst and growth vertical to technology, which was lacking for a little while. After we came off 21, tech became a little bit subdued. AI is given now a new growth impetus, and legacy seasoned public companies need to transform. They need to change. They need to stay ahead, and that we believe will lead to M&A.
Phil, so interesting. David and I have been talking all morning about DeepSeek. How can you not? It's still a big issue for a lot of investors. I spoke this week privately to a big venture capitalist who explained to me when they saw DeepSeek, the big question they had in their mind is, why are these American companies raising so much money when it comes to AI if it can be done more cheaply? Is that conversation happening more among your clients?
Well, I think we're looking towards the long term in the United States, and that's what you need to do. You need to be looking ahead. I think DeepSeek caught everyone a little bit by surprise this week, but I think you know, when you do talk to CEOs and execs, no one expected China to just stand still and wait. We expect artificial intelligence to be globally competitive. But I think the investments we're seeing through the new administration's announcement about Stargate with OpenAI and SoftBank, and a willingness to bring in friendly outside external capital to the US, is very forward thinking. This debate about compute, if AI can be more efficient, that's great. It's going to lead to greater consumption. There was obviously this tug and war with Microsoft earnings last night in terms of consumption, spend on compute. At the end of the day, if AI can be more efficient, there'll be a lot of long-term winners in that. It'll be great for overall consumption. We want the United States to win. compute is used for training and compute is used for inference, right? Inference allows AI to be more precise, to be more efficient, and to have more end-use cases, which will lead to greater software company adoption, which is why we're very bullish now on software, which is why I think that'll help these monetizations, whether it be through M&A or whether it be through IPO. So we don't suddenly become negative with DeepSeek's announcement. I think it just shows that this is going to be globally competitive, and the United States has taken a long-term view to win.
Last question here just about the appetite for deals globally. So we're at a point where we're wondering about tariffs, what's going to be in place. How is that attitude affecting the appetite for deal making kind of cross-border?
I think everyone's aware that tariffs is not just one way, it can be two-way, it can lead to obvious retaliation. I think we are very positive about North America, the liquidity, the depth. Dina was just on before me talking about her enthusiasm for new issues coming to the market in North America. But we are interdependent, right? We operate in a global marketplace. I think there'll be a lot of global interest in North American companies. And I also think the strength of the US dollar will lead to opportunities overseas. You know, one thing is for sure, there's been a lot of talk about European concerns, European weakness. If Europe feels that weakness, many of the idiosyncrasies and different political persuasion within certain nation states, we may well see greater collaboration. We may well see consolidation within Europe to have European powers that can compete with the United States. So it's going to be a really fascinating 12 months ahead. Citi is, as you know, the most global investment bank, and it's a great opportunity for us to be representing our clients around the world.
Phil, we thank you so much for joining us here on set. That is Phil Drury of Citigroup. And to the point Phil was making, it's interesting, when it comes to Japanese investment in the AI industry, arguably another big national security concern, that's fine. But when it comes to U.S. steel, then that's a no-go.
Still eager to see how all of that shakes out between the outside bids and the lawsuits, what becomes of that.
It's not
But yeah,
over.
the definition of ally
Yeah.
seems to be still undetermined here when it comes to Japan.
Yeah, last quick check on the markets before we let you go, guys, because of course it's been a crazy day already. We've had whipsawing activity here in the NASDAQ 100, and you can see now it is firmly negative. It is down more than 0.1%. The S&P 500 barely holding on to its gains. Flat, now almost negative on the day. We'll keep an eye on markets throughout the day. Coming up tomorrow on Open Interest, though, Scott Croner from Citigroup, Emily Rowland from John Hancock, and the CEO of Brinker. Don't miss it. This is Bloomberg.
From the heart of where innovation, money, and power collide in Silicon Valley and beyond, this is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
I'm Caroline Hyde in New York. This is Bloomberg Technology. We are awaiting President Trump to make remarks on the fatal plane collision in Washington. The collision was between an American Airlines regional jet and a military helicopter near Ronald Reagan Airport. Authorities confirming there are no survivors on board, making this one of the most deadly U.S. air disasters in decades. Outside of that airport, Bloomberg's Tyler Kendall joins us live. And indeed, the Reagan Airport set to be resuming flights as of now, Tyler.
Right, Caroline, we're starting to see people come in with their roller bags to board their flights as it's 11 a.m. Eastern, and Reagan National Airport has officially reopened the airport, saying that there have been some delays and cancellations, but that they are trying to resume operations as normal. I actually spoke to somebody who's about to board a flight later this morning who said he wasn't sure if he was going to make it to the airport today, calling this absolutely devastating. Now, us reporters were briefed earlier here at the airport by officials who have confirmed that this has moved from a search and rescue mission to a search and recovery mission. We are not expecting any survivors from this deadly crash. Officials confirmed that 27 bodies have been pulled from the Potomac River. We know that 64 people were on the American Airlines commercial flight and that 3 people were on the U.S. Black Hawk helicopter when the aircraft collided.
The trade group Airlines for America currently putting out a statement. We are heartbroken and devastated by last night's tragedy involving a commercial aircraft and military helicopter near DCA. Our deepest condolences. They stand ready to assist, Tyler. Ultimately, who else is involved? The responses from American Airlines as well.
Right, I actually caught up with the CEO of American Airlines, Robert Isom, after that briefing today. He told me that he has been in touch with the White House and that American Airlines is sending 100 personnel here to the airport to assist the families of the victims from this crash. We know that this is going to be a multi-agency investigation and response. We are awaiting a briefing from the NTSB later today, and Transportation Secretary Sean Duffy said that the FAA is also going to be involved. But a lot of questions remaining about how this crash happened, considering that Transportation Secretary Sean Duffy said that everything appeared to be normal. He characterized the flight paths of these 2 aircrafts as normal, and that they were in touch with air traffic control and that they are still trying to figure out exactly how this tragedy came to be.
Tyler, this is Mike Shepard in San Francisco. This is posing an early test for Donald Trump's administration. He doesn't even have a head of the FAA in place. So it is a bit of a scramble, is it not?
Right, exactly. So Michael Whitaker, who was the FAA administrator, gave his resignation in on January 20th, the day of Donald Trump's inauguration, and they have yet to name a acting replacement in his place. We know that our White House team is reaching out to them to try to secure details on what that looks like, considering that we do know that the FAA is involved. We also know that the newly minted Defense Secretary Pete Hegseth has been briefed on this and says that the Pentagon is also launching their own investigation into this, but a very early test for this new administration, considering that Sean Duffy was just confirmed this week by the Senate. So this is really day one for them as this becomes a and also local response here on the ground at Reagan National Airport.
Hours, he was sworn in hours before this disaster. Tyler, can you just say how ultimately unfolded with emergency services on the evening of the event?
Right, so we know that this crash happened about 9 p.m. last night. If you were in Washington, D.C., you probably heard the sirens as a massive search and rescue operation started to get underway. Officials did brief late last night, but with very little details. And then they gave us a few more this morning. They do say that both of these aircrafts were on what was considered to be normal flight paths for them, and that they also were in communication with air traffic control. I did catch up with Senator Mark Warner. He's a Democratic senator from Virginia who raised concerns about a potential shortage in air traffic controllers. So that's one of the themes that we're going to be looking into here. But as this story continues to develop, questions remain, including why this collision happened. Defense Secretary Pete Hegseth did say that this was a training operation, but not to look too much into that the pilots of that military aircraft were considered to be experienced. We know that DC Fire and police are here on the ground as they continue this rescue operation, but it has been complicated by a few different factors. That includes the freezing cold temperatures that the DC region experienced last week, which have frozen the Potomac River and have made those search efforts a little bit more complicated, as well as strong winds overnight, which actually widened the search area, which officials said have complicated their search and rescue missions, but that they are expecting to conclude this in the coming days.
A tragic sense of deja vu for some. Tyler Kendall, we thank you very much. Let's get out to Bloomberg's Kayleigh Lyons. Kayleigh, we currently are seeing live shots of the press briefing room in the White House where we are awaiting President Trump. The latest from your side, from the White House administration side.
Well, we do know that the president has been fully briefed on this, and he says he'll be sharing more details as he can. It'll be interesting to see to what extent he provides insight into where this investigation has led so far when he's expected to speak in just a few moments, keeping in mind that it is unusual for anyone other than the investigative authorities in charge here, which is the NTSB, to be providing those updates. So we'll see how much clarity Donald Trump or his cabinet secretaries, Tyler was just referring to, Sean Duffy or Pete Hegseth, will be able to provide on where things stand, as this is still an ongoing recovery operation. And first and foremost, of course, is a humanitarian tragedy with 67 lives expected to have been lost in last night's events. It will also, we'll see if Donald Trump is similar in tone to what he initially posted on Truth Social last night when he was talking about how the flight paths appeared regular, that this seemed preventable, something that was echoed by the newly minted Treasury Secretary Sean Duffy this morning. So whether or not they get into any recommendations as to how this can actually be prevented in the future remains to be seen. That might be a conversation that happens later in Washington, as today primarily is still obviously about trying to bring closure and support to the families of those who were affected by this crash.
Kayleigh, you did raise the question of what happens next in terms of policy and maybe ways to prevent a recurrence of this. We do know that corridor along the Potomac is heavily trafficked by military aircraft. What are we hearing about that at all today?
Well, this is something that has been consistently raised by the congressional delegations representing the states in this area, Maryland and Virginia. There obviously had been a very high-profile fight taking place here in Washington last year around the FAA reauthorization about the addition of airline slots at DCA. Ultimately, 5 slots, 10 round-trip flights were added as part of that package last spring. And there was concern raised by the likes of Senators Mark Warner and Tim Kaine, who we actually heard from at the briefing this morning, about the way in which that could add to congestion, create more delays, and potentially cause safety concerns. There is no direct link that we're aware of between the addition of those slots and the events of last night, but it does speak to the congestion issues in the D.C. area, noting that it's not just commercial space, but military space as well. And the idea that there was a training, an ordinary nighttime training flight taking place for those on the helicopter at the same time that you were having a commercial airline entering essentially the airspace, getting ready to land at DCA. So it's that kind of thing, both on the military side and on the commercial aviation side, when it comes to questions around air traffic control, personnel, and just the congestion, how many flights are flying in and out of DCA every day, tens of millions of travelers a year. All of those things are likely to be looked at as we move beyond the recovery stage into further aftermath. But again, it is still an active recovery scene as we speak.
And we continue to await President Trump to talk on this tragedy, Kayleigh, from the White House press briefing room. We did hear from the very newly anointed Defense Secretary, Pete Hegseth. Remind us what he had to say about the events.
Well, he noted that there were 3 military personnel on board, obviously on that helicopter, because next of kin had not yet been notified. The military is not at this time releasing their ranks or their names, but he did note that these were fairly experienced pilots that were on board that Black Hawk, that this was a routine training mission. But both he and Sean Duffy earlier in the day have said that we shouldn't take training to mean to suggest that these pilots were still getting experience. These were routine annual operations that they had to do, essentially getting flight hours, not that they were learning on the job. Now, obviously, this is going to be looked at further, as Sean Duffy did indicate in the press conference this morning, that the helicopter was aware of the commercial aircraft, less clear that the commercial aircraft was as aware of the helicopter, and Donald Trump did seem to be on his Truth Social post last night suggesting that it was error on the part of the helicopter pilot. We just don't have those answers yet. We'll see if the president or any of his cabinet secretaries shed more light on that, or if we're going to have to wait to hear from the NTSB later today. But all of them, we should note, and everyone we've heard from today has first and foremost expressed condolences to the members of the military and, of course, the travelers and the crew that were on board the American Airlines flight.
Kayleigh, is there a risk that the president, in his enthusiasm to get out here today, gets ahead of where the investigation is in drawing his own conclusions about what might have happened?
Well, arguably, Mike, we saw that already last night in the immediate aftermath. He took to Truth Social and said the airplane was on a perfect and routine line of approach, going on to say, why didn't the helicopter go up or down or turn? Why didn't the control tower tell the helicopter what to do instead of asking if they saw the plane? He said the bad situation looks like it should have been prevented. Now, we don't know what the president has seen that may have led him to those conclusions, if this is actually where the investigation has gotten to at this point, because we have yet to hear from the NTSB investigators.